There are high expectations for Tesla this year, especially in light of its recent price increase. There is still uncertainty over whether Tesla will be able to build up to 2 million cars in 2023, despite several broadcasters observing the automaker recording high demand for all quarters of the year, and some even projecting the automaker may produce as many as 2 mid-sized vehicles this year. Watch this. Before we begin, though, remember to watch through to the very finish to ensure you don't miss any of the fantastic stuff in this video. Hi everyone, happy to be back at Tesla tomorrow. Gradually, Tesla is moving towards being the most valuable automobile company in the world. But this will require time, effort, and execution in all of its new and existing factories in addition to energy storage and FSD. The automaker produces electric cars, which require time to ramp up and build. Despite a steep drop in car profit margins, Tesla managed to slightly surpass Wall Street's target for fourth quarter revenue and profit in 2022. The company aimed to convince investors that it can reduce expenses to weather the recession even as competition heats up in the coming year. Tesla has established itself as the leader of a price wall thanks to its steep price reductions in December and January, yet its prediction of 37, the number of cars sold this year has increased to 1.8 million, which is less than in 2022. For 2023, a few of Tesla investors are projecting 2 million deliveries, and a big part of this is because Elon Musk stated during the results call that if nothing truly went wrong, that is, if there were no significant military disasters or economic collapses, minus 2 million car deliveries would be feasible. More information on this topic and how Tesla plans to reach the milestone of 2 million vehicle deliveries are provided in this video. Before we begin, please remember to hit the like button, subscribe, and turn on notifications if you enjoy this kind of content and want to stay informed about all the latest developments. Its Q4 financial report for 2022, where is Tesla? According to Tesla, it aims to deliver 1.8 million cars in 2023, a 40% increase over the 500,000 vehicles it delivered the previous year. Musk stated that without outside interference, 2 million cars might be delivered in 2023, despite the fact that he has fallen short of his own high expectations for Tesla sales in recent years. Musk claims that it might be able to provide more cars this year if there are no unanticipated events. During the Q4 2022 earnings call, he stated that Tesla's plants have an internal manufacturing capacity of nearly 2 million cars. In response, Musk said that Tesla's price adjustments truly had an impact on the typical consumer at the outset of a conference call with analysts and investors. He also mentioned that the automaker had to slightly raise the price of the Model Y SUV because car orders were almost twice as high as manufacturing in January. He still thinks there is a strong market for Tesla cars despite the fact that the auto sector is contracting, despite the fact I'm referencing that he anticipates a challenging recession this year. What does Tesla's manufacturing of 2 million vehicles signify for the market as a whole? Keep an eye out to see if Tesla delivers 1.31 million cars in 2022. If the automaker hits 2 million cars this year, there will be a gross rate increase of 53%, which doesn't seem too extreme as investors have come to expect a 50% annual growth for Tesla. By estimating the current capacities of all Tesla factories, we find that production is roughly 250,000 cars per quarter for Shanghai and 150,000 cars per year for Fremont, or around 1.6 million annualized. Therefore, Tesla needs an additional 400,000 vehicles from its new factories in Berlin and Texas. Assuming these companies are currently operating at a run rate of 3,500 vehicles per week, that's 360,000 cars annually from them, added to the 1.6 million cars from the other factories. We can say that since Tesla will already have 1.96 million vehicles, Musk's prediction of 1.8 million cars for the year is actually less than the current run rates. Approximately 250,000 Model Y vehicles are produced annually in Fremont, using about 20 GWh of 2170 cells. This leaves 15 GWh of 2170 cells available for use in Tesla's Gigafactory in Texas, resulting in approximately 180,000 models produced annually from Texas, or roughly 3,500 per week. The production number would increase from 1.96 million to 2.01 million if 46A battery progress is able to produce 1,000 Model Y vehicles per week. This is approximately the same as the current cell capacity of Tesla and would equate to an additional 50,000 vehicles annually in Giga Berlin, Giga Texas. The key is Tesla's sales prospects. Attention to investors. The company stated that it continues to aim for a compound annual sales growth of 50%, and we think this has informed most of its production plans for the year. At its investor day in March, the automaker is expected to reveal its plans for a next-generation vehicle platform, according to Jessica Caldwell, Edmunds' executive director of Insights. All of Tesla's cars are in dire need of updates. Beyond software, she said that in order to make EVs widely available, Tesla will mostly rely on the less expensive units in addition to the Model 3 and Model Y. While it shouldn't be too difficult for Tesla to do, there might be unanticipated obstacles in the previous past. In a worldwide context, Tesla has frequently run into a number of issues that have hampered its growth in 2020. The pandemic impacted every sector of the economy, causing output to be disrupted in most of them. The repercussions of COVID-19 are considerably more severe than those of this, and the economic fallout lingered for 2 years before manufacturers and other businesses were able to adjust to the new circumstances and resume their operations in 2022. The conflict involving Russia and Ukraine had an adverse effect on the world economy, including Tesla. The company's development was negatively impacted by the severe blow to the U.S. macroeconomic climate. This year, Tesla has a lot of potential accomplishments, but the carmaker is not solely responsible for them. Tesla stated that, given that its Shanghai factory was operating at nearly maximum capacity following its recovery from production issues earlier this year, it does not anticipate significant near-term volume increase from China. Hargreaves Lansdowne analyst Sophie Lawn Yates added that the automaker will be greatly impacted by even a slight decline in demand. Tesla is using outdated products, and Musk stated that mass manufacturing of the Cybertruck won't start until the following year. Previous sources stated that the much-awaited model wouldn't be mass-produced until later this year. In the upcoming months, price codes might also have an impact on Tesla's profits. The automaker predicted that his car profit margins, which in the reported quarter fell to a 2-year low of 25.9%, would rise over 20% due to pressure from rising raw material commodity prices, the expenses of stepping up battery manufacturing, and the construction of new plants in Berlin and Texas. Its aggressive price is widely expected to put additional pressure on logistics and warranty cost margins. Slices since the beginning of 2021, Tesla has raised prices frequently. However, in December, the company reversed course and offered discounts in the U.S., and in January, it cut prices by as much as 20%. Although investors feel alarmed by these price reductions, there are a number of reasons to maintain your optimism in spite of these drastic price cuts, which have decreased prices by an average of almost 20% across all markets. Tesla continues to produce remarkable gross margins. Tesla's $9,000 in net profit per vehicle in the most recent quarter was more than 7 times the similar figure for Toyota in the third quarter of 2022, as analysts had predicted given the company's profitability, which allowed it to lower prices and put pressure on competitors. Fortunately, operating margin is more significant than gross margin. The gap between the two represents Tesla's operating costs. Overall, operating margin is what matters most. Tesla has done a fantastic job of keeping their running costs as low as possible, and as their production rises, this value does not appear to rise significantly. Since operating costs are largely stable, Tesla must lower pricing in order to generate new demand for its increased supply. As a result, in 2022, the OPEX per vehicle will also be decreasing on a yearly basis. After delivering 1.31 million cars, Tesla's market capitalization was $7.2 billion. This results in an operating expense per car of approximately $5,000. The running costs per vehicle may drop to $3,600 in 2023 if Tesla sold 2 million cars and our PDX stayed the same. However, this would still represent a slight rise. On the other hand, even if the PEX was $8 billion for the entire year, that would only amount to $4,000 per vehicle, a decrease of $1,500 per vehicle plus all higher operational profits. Although 2 million deliveries in a year is a big deal, Tesla has a strong competitive advantage when it comes to pricing. This is one of the automaker's main operating leverages. As Tesla ramps up, however, its operating expenses per vehicle will start to decline significantly, freeing up more space for the production of more cars. Do you think Tesla can actually produce 2 million cars this year? Please share your thoughts in the comments section below. Don't forget to share your valuation of Tesla. If you'd like to learn more about what Tesla has been up to recently, click on the next video on your screen. Seeing you there.